The fear of recession is here. We're hearing it in the news. We're seeing the markets react. But here today, we are going to discuss how to recession proof your portfolio. We're going to take a look back through history to see the best sectors and best stocks over the past 5 recessions. We'll also be taking a look at the moves that I am making to recession proof my portfolio. And then we're going to finish the video off by looking at a useful tip that I found when it comes to building your portfolio during times of uncertainty. But if this is your first time here, my name's Nick. Welcome to Waste of Wealth. Before we get into the video, huge favor, huge ask. If you learn something new or you get some value out of the video, hit that like button for me. I definitely appreciate that. And if you haven't already, please consider hitting that subscribe button and turning that notification bell on for similar content just like this. We're going to go and take a look at the computer right now at a list of sectors and companies that have performed best over the past 5 recessions. So we can see here, it's got some key sectors, some sectors that seem to repeat. Consumer staples comes up, materials comes up, healthcare comes up. Utilities is definitely a good one as well. And we can see all of these companies and what their average percentage was during the last 5. So we can see the core holdings here, your Walmarts, your Pfizer's, your Johnson & Johnson's. These are industries in which will not be impacted by spending if the economy does tighten. These are things that people will need on a day-to-day basis, and they won't see their earnings be heard as much as other companies within the market. So take a look at some of these, maybe pause the screen, write some of them down, do your own research on them, figure out which one may be best for you. And then what we're going to do is we're actually going to take a look at the last 2008 financial crisis to get an understanding of maybe the companies that work best during that time, because what we know is that past performance is not an indicator of future performance, but just to get an understanding of what is going on in the market. That's what we're trying to do, is to teach how to, do your own research and how to build the portfolio that suits your needs best. So we see Dollar Tree here, discount stores. We see Pharma is making an introduction back in here. We also see Walmart on the list. We see a freight company, etc., etc. So these are companies that performed really well during the financial crisis. So every single recession is different. There might be a different implication. 2000s were tech stocks. 0809 was obviously real estate took a hit along with financial companies. And these are just used to be reference points to just get an understanding of where to be putting your money. Now, with that being said, we're going to jump and see what I've been doing to prepare my portfolio. And what we'll do is we'll just give a high level overview as to what my thought process was. The first stock that I've been building into for probably since 2019, for 3 years now, is Dollarama. And I love this company because there's still a growth aspect here, but it also provides the defensive side because people will always need to spend. And if prices continue to increase, they may not be able to spend at your traditional grocery store. And Dollarama may win for that circumstance. They obviously have done some cool things throughout, signing that partnership with the company in South America. But I do believe that Dollarama is a great play. And obviously right now we can see the performance is very strong. Is it a good time to get in right now? Well, I'll leave that up to you. And obviously doing your own due diligence might say, hey, it might be a good opportunity to buy in on the dip. So Dollarama, dollar stores is my number one play. Moving into what I've been buying more recently, and something that we've talked about a bunch of times on this channel. We've talked about it in 3 sectors to invest in while rates are rising, the interest rates are increasing. What sectors are best? Well, we talked about healthcare. I'll link that video above to maybe give you some other ideas as to where to invest in. And we also covered this in a video covering the best healthcare ETFs on the Toronto Stock Exchange, and we talked about XHC trading on the TSX. It trades in the US as well as IXJ. And what we can see here is that healthcare, when we go into a recession, when the economy does slow down, healthcare does not. People are not going to stop spending on their health just because the economy is going into a little bit of a downturn. So this is probably one of the safest places to be. And if you want to see what I'm buying, if you want to see when I'm making trades in real time, follow me on Instagram. I've just started over the past couple of weeks highlighting when I'm making buys in the marketplace, give you an indication as to what I'm doing. It doesn't need to be what you're doing, but to show you maybe some of the decisions and some of the framework that I'm using, especially right now in volatile times. So I also have up on here is HHL. We covered it again in that video with the ETFs and the healthcare. This is a high yield play, and it uses covered calls, which works in a market that's stagnant, not a bull market, not a bear market. You collect the yield. It's a great strategy. If we start coming out of this kind of stagnant market, volatile market, I'll probably offload that position. But XHC is one that I've moved into in the past couple weeks. And in the third sector is one that I'm taking a little bit of an unconventional path towards. We know that obviously tech was a big sector that won in 2020 while we kind of rebounded. And I've started to step back and say, okay, we've seen such a sell-off in the past, whatever it's been since November really of last year. This is a potential opportunity for me to start adding some tech into the portfolio for a long-term vision. So I started adding into Apple. I probably bought in at around 144. Again, if you want to see some of the trades that I'm making, go over to my Instagram page. I've highlighted a portion of the story. I want to be nibbling away at companies that have sold off, 10, 15, 20 points from the high. I like Amazon's. These are kind of where I want to rotate my money from some of the value companies I've had before into some of the growthier names, obviously, because I have a longer term in the market. I'm looking at maybe a 10, 20, 30-year time horizon for some of these companies. So with that being said, these are some of the moves that I'm making today to prepare myself for the future. If you're looking at capital preservation, if you're looking at multiple different things, some of these might not be best for you. But obviously, these are my own personal opinion. So moving on, we're going to be taking a look at an interesting article in which I found, which gives you a little bit of an indication, a little bit of a tip as to where to look into the marketplace when there is volatility. So we've went over what the historically recession-resistant sectors are. Consumer staples, these are your grocery stores, food. This is stuff that people are going to buy no matter what. Healthcare, same provision. People are going to spend on healthcare no matter what the economy is doing. Utilities, this is energy, electricity. This is stuff that people will need to keep their families and lifestyle running, and do not see much of a hit during a recessionary period. Now, other stocks or other ideas to consider in the marketplace is to really get an understanding as to what is performing best in the moment. So to take a look at the market right now and see certain companies and how they're performing right now will almost give you an inclination of how they will perform over the next 6 to 12 months. So obviously we've seen Dollarama on the uptrend. It hasn't taken too much of a sell-off. That's one in the marketplace in which you can look as a capital preservation. How much higher it has to go, I'm not entirely sure. But what we can see here is that every environment is different. Having some exposure to technology still makes sense, but not to the degree of 2020. Investors should be selective and focus on the companies with consistent earnings. And what they're going to say here, and what they're going basically trying to say, is that look for the sector that's winning. No recession is the same. We talked about it before, 08, 09. Financial companies took a hit, 2000. Tech companies took a hit. There's going to be different sectors that are winning. Obviously, oil is a big winner right now. I wouldn't suggest looking to get in there, but that's my own personal opinion. I have some oil in the portfolio, but I'm not adding to anything right now. If anything, I'm looking to offload. What they go on to say is to create a diversified portfolio, because what they're trying to say here is that you don't want to time the market. Timing the market is essentially impossible. The best of the best, the highest paid people in this industry cannot do it. There's no reason to think that you can do it as well. So there's no reason to neglect some of the things that have sold off, like the tech portion. That's why I kind of like it. I want to rotate into tech because in the next 1 to 5 years, we could see growth in that area, and I want to be properly allocated to it instead of buying in later. So I want to buy low and sell high. So I'm selling off some of my value names and heading into tech. And this is kind of what this is saying is make sure that you're balanced throughout. Maybe use ETFs. Get an overall coverage of a certain sector, whether it's an ETF in healthcare, ETF in utilities, an ETF in real estate. Use these as percentage allocations within your portfolio. Why are we trying to pick the winners? Let's try and make it easy. Have a well-diversified portfolio. And before we go, while I'm finishing this off, here's some names that I found on a website that provide good defense in a volatile market. Here in Canada, we can see a bunch of different names on here. Alimente Couche-Tard, BAM, CapREIT, TD, some of the banks here, Enbridge, Constellation Software, etc. So take a screenshot of this, do your homework on these, see what works best for you. But let me know down below, what are you doing in your portfolio to protect against a recession? Are you letting everything ride? Do you just pick good companies with good earnings and just run through the volatility? Or do you kind of buy and sell and move throughout the market? Would love to know your thoughts on it. Let me know what you think of my picks. I hope you all have a great week in the markets. Happy trading.